It's time now for our business update with Yuka Roye. Hi, Yuka.
Hi, Jeannie.
Let's talk a bit more about the coronavirus cases and the rise of those cases outside of China, what it's been doing to the markets.
Well, it's causing a market sell-off. This emerging picture that the spread of the virus may be slowing in China, but it's speeding up elsewhere was a tough wake-up call at the start of the trading week. Major European markets are all down more than 3% at midday, with Milan dropping further by over 4.5 percentage points. Airlines, hotels and luxury markets have all been hit hard. Earlier in Asia, South Korea's stock market, Kospi, ended the day down almost 4%. This, of course, after the country became home to the biggest concentration of cases outside China. Oil prices also dropping amid renewed concern over a slowdown in global manufacturing activity due to the coronavirus outbreak. And gold, meanwhile, soared to the highest level in 7 years as traders turned to safe haven investments. Well, to get an idea of how the virus is affecting the world of finance around the world, we can now cross live to Jasper Lawler, Head of Research at London Capital Group. Jasper, thank you very much for joining us. Now, last
My pleasure.
week,
Thank you for having me.
Now, last week, reactions from global markets were somewhat calm as China reported fewer cases of new coronavirus. What's happening today?
Yes, there's been a marked shift in sentiment, Yuka. It started really on Friday when we had a report suggesting that the US service sector had contracted. And previously the thought that the thought was that the United States, and indeed by that virtue Europe and many other parts of the world, would be impervious to the effects of the coronavirus. The standard thought process was that the effects would be concentrated in China, and that actually authorities would be able to get hold of the situation quite quickly, and the economy would sharply rebound from any discomfort that it had gone through. But now we're starting to get a sense from that US service sector data. It shows that Chinese tourism, the China influence in the supply chain throughout the processes throughout the Western world are already taking effect. And now with the spread of the virus, particularly in Italy, it's getting concerns worried in Europe, and hence you're seeing this downturn in equity markets that you can say now with the benefit of hindsight we're probably a bit too dismissive of the potential risks that this virus could bring to the global economy.
Now, meanwhile, the IMF says that it expects the impact of the epidemic on the global economy to be quite limited, and that it would shave just 0.1% of global growth this year. Is that an optimistic projection?
Yes, I think it is cautiously optimistic by the IMF. I mean, they obviously have to weigh up a balance of giving a real assessment of what's going to happen, but at the same time not sounding too alarmist, because that can actually create a virtuous circle of people actually becoming alarmed because they hear an alarmist statement from a respected organisation. So they have to temper their language, but I think the data that we're starting to see and the real numbers on the ground in terms of how quickly the infections are spreading is starting to tell us that actually the effect is going to be a bit more widespread. Hopefully, it just takes a little bit longer to recover from, and the effects aren't so deep. But it's the uncertainty, of course, that everyone's grappling with at the moment. We just don't know, particularly even just comparing with the SARS outbreak in 2003. We're using that as a benchmark. But China was so less influential in the global economy then. We can't quite permeate exactly where does this all fit into the global supply chain. Even in just looking at share prices today, for example, in the UK, cinema share price is down massively. Even in the UK, where the number of cases are still inside quarantine, there's just a sense that probably people are going to step back from their ordinary activities just in response to this. And again, that's very hard to judge how deep that will be.
Now, of course, that uncertainty is sending investors to turn to safe haven assets like gold. Gold is hitting a 7-year high earlier today. Are they making the right decision here, and is that trend going to continue?
Well, I think specifically on gold, it's got two tailwinds behind it. One is that there is so much uncertainty about this virus, but two is the reaction function from authorities, specifically from the monetary authorities. So central banks have been quite vocal from the onset of this virus vocal in that they don't, admitting they don't know the economic effect, but saying that they are ready to step in with lower interest rates and further government bond purchases, both of which just add money into the system. And when there's a lot of money sloshing around, people tend to prefer the hard assets like gold. Hence, I think it's still got some room to go to the upside, because we're unlikely to know exactly how this virus works out in the economy for quite some time yet.
Well, Jasper Lawler, thank you very much for your insight.
Yuka, earlier we were talking about the coronavirus and the effect that it's having on Italy, but the European Commission has said that so far it's not considering travel restrictions within the Schengen zone after that big jump in Italy.
No, the EU Crisis Management Commissioner, Janez Linacek, says that the coronavirus will have an impact on the bloc's economy, but that measures to contain the outbreak should be coordinated and proportionate. The EU has also pledged €230 million to help fight a global fight against the disease.
De l'analyse de risque crédible.
114 million will go to World Health Organization's call for global preparedness. Further 15 million will go to support partner countries in strengthening their resilience and preparedness. 100 million euro will go into research funding, development of vaccines and treatment that will have a global benefit.
In the meantime, U.S. President Donald Trump is in India, where he got a huge welcome on his first official visit there. He pledged to strengthen bilateral ties, but trade relations have been tense between the two countries recently.
Well, that's right. At a huge rally in Ahmedabad, the U.S. president said that a fantastic trade deal was in the making, although many experts have said it's unlikely to happen anytime soon. Ariel Ganke has more.
Donald Trump and Narendra Modi both hailed each other's policies of prioritizing national economic interests above all else. But that shared view may also be the one that prevents the two from compromise. President Trump's America First policy and Prime Minister Modi's similar Make in India campaign have diminished the prospect of a trade deal between the U.S. and India. Though the U.S. president called Modi a tough negotiator on Monday, he nonetheless expressed optimism about reaching a deal.
We are in the early stages of discussion for an incredible trade agreement to reduce barriers of investment between the United States and India. And I am optimistic that working together, the Prime Minister and I can reach a fantastic deal that's good and even great for both of our countries.
The United States is one of India's most important trading partners, with bilateral trade hitting $142.6 billion in 2018. India is the United States' 12th largest goods export market. But trade tensions between the two countries have reached new heights since President Trump took office. Last June, Washington ramped up pressure on New Delhi by ending its preferential trade status, claiming India had failed to provide the U.S. with adequate access to its markets. India was the largest beneficiary of the program, which allowed $5.6 billion worth of its goods to enter the United States duty-free. Washington also slapped tariffs on Indian steel and aluminum. In response, India imposed its own retaliatory tariffs on 28 U.S. products, including almonds, apples, and walnuts.
We'll wrap up now, Yuka, in India still, where there was a lot of hype over the prospect of a gold rush over the weekend as officials announced the discovery of large amounts of gold deposits.
Well, that announcement came from the northern province of Uttar Pradesh. It said that the gold deposits estimated to be around 3,000 tons were found there. The amount is almost 5 times India's current reserves of the yellow metal. Now, India is the world's second biggest consumer of gold, and local media were excited at the news, but that story actually needs to be taken with a grain of salt. The Geological Survey of India has since said that the total gold that could actually be extracted from the region might only be about 160 kilograms, not tons. The state nevertheless plans to put the reserves up for auction once it gets clearances from environmental authorities.
160 kilos, that's still a lot of gold.
Yeah, but that's just, it's a very small fraction of a 3,000 tons.
Yuka, thank you for that. Yuka Raya with that look at the business news.